Have you looked at shares of Tesla recently? Well, you should have, because the stock is now down 15% from its all-time highs hit earlier this year. Question is it a discounted stock that's a good buying opportunity, or is it just the beginning of a longer downslide? I don't know, but Dennis Davitt of Harvest Volatility Management and Craig Johnson of Piper Jaffray may. Craig, I'll begin with you because this is a MOMO, a momentum stock. Charts really, really matter for these kinds of names. What are the charts telling you about Tesla?
Well, Brian, you're correct. This is very much a momentum stock, and I would not step up and buy this. And the reason I wouldn't is if you look at the chart, you can see that we've just recently broken what I would define as a bit of an ascending triangle. The stock has broken this, and it looks like to us the next kind of big area of support comes in around 290. So you got about another 11% downside before you really find that support. And Brian, when you have these kind of momentum stocks, any sort of production delays or any sort of push outs they may have with any of these new models, these stocks are going to react very quickly. So I would not be stepping up and buying the shares quite yet. I'd wait for another 11% downside of that 290 level, Brian.
Dennis, does the options market tell that story or a different one?
Well, the options market is telling a story that is Tesla's two different companies. You talk to two different people, you get two different stories about Tesla. Is it an infrastructure play or is it a car manufacturer? As a car manufacturer, it's overvalued. As an infrastructure play, it can go considerably higher. The momentum can carry it higher. The thing about Tesla that most people don't realize, and we saw it yesterday over the last few days, it's a highly rate-sensitive stock. A lot of the growth is built on Tesla borrowing money. And if the cost of borrowing money continues to increase, then it's going to have real negative effects on the stock. One thing I do see in the options market, and I think it's irresponsible if you own this stock and you've owned it all year, it's still up 50%. With the VIX sub 10, and you own this stock, I understand people maybe don't want to sell it for tax ramifications, but buying puts. If you can spend 7% and buy the at-the-money put, the $325 put expiring out in January, you are protected. So if the stock does go down 11%, you're taken out of the stock right here. If the naysayers are wrong and the stock continues its rally higher, you get to participate. I mean, we saw it happen in Celgene, and you look at NVIDIA, and you look at a lot of these stocks that are up on the year, the options on those stocks are not reflecting the inherent risk that's in these stocks, and they're very inexpensive. And I mean, that's the play in Tesla. Whether you buy it or sell it, if it goes higher or lower, spend a little bit of money, protect your downside, and then you can continue in the upside. I mean, that's the trade that I see in Tesla.
All right, good take there, good trade there. Craig Johnson saying the charts simply not ready yet, not ready for those Tesla buyers to come in. Guys, thank you very much. Appreciate both views on a very widely traded and hot name. And folks, as always, thank you for watching Trading Nation. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.